Michael Jordan has to sell Hornets. Michael Jordan just had to sell his team because of his $500 million short position on GameStop and Crickets. Now correlate this. Ken Griffin, the billionaire CEO of hedge fund Citadel, defended his $2 billion investment in short seller Gabe Plotkin's Melvin Capital last month amid the height of the GameStop mania. Now you know this money was sent to Gabe over his bad bet with Michael. Ken wants his money back after he gets out Gabe. Only way to get it back was to sell Michael Jordan's team. What is going on, guys? Lottery Socks here. Welcome back to the channel. Welcome to the channel if you're new. Today we have some deep stuff to go over with AMC GameStop, what happened amid the GameStop mania, and why Ken Griffin is forcing to get his money back by selling Michael Jordan's team. We also have more stuff to talk about with AMC GameStop The Spy. All I ask you guys to do is wait till the end of the video so you don't have to watch another update video here on YouTube. I'm going to update you on everything that there is to update you on. All I ask in return, it's free. It's one click of a button. Hit the like button, hit the subscribe button, drop a comment down below. Since I research, edit, record, upload these for you guys, maybe not in that order. But without further ado, let's get into it. I'm going to roll this clip before we get into the important stuff so that you guys can get this all cleared up in your head. What's happening with Michael Jordan, Gabe Plotkin, and Ken Griffin, and why Ken Griffin is forcing Michael Jordan to sell his team to get his money back.
A terrible investment with Gabe Plotkin. By the way, that's a minority owner who's buying the damn Hornets. So he told Gabe, yo, go ahead and bet $500 million of my money, I got you. It was like a verbal IOU. And Plotkin went and put a ton of money into the stock market, somewhere around $4 billion, and they lost. But instead of going to Jordan and saying, give me that $500 million, Plotkin said, I don't got it. I don't have the $4 billion I just bet. So then this man right here, Ken Griffin from Citadel, worth $32 billion, the richest man in Chicago, bailed them out. So Griffin gives Plotkin about $4 billion. None of this is a secret. This is about 8 months after their bad bet. He buys them out and covers their ass. But then he wants his money. He's here to collect. So Plotkin owes him. So now Plotkin pays him. But now Jordan owes Plotkin. It's a trickle-down effect. And Jordan don't got the money. Jordan made a bad bet. So he's got to sell his team to cover the bet. So he's selling to the guy he owes the money to. He's selling to his bookie. Now here's the thing. Plotkin used to work for Griffin. These are two multi-billionaires from Chicago, and they just fleeced Jordan out of ownership. And they're taking his team from him. Jordan just lost his seat at the big kids table. He can go make his millions with Nike, and you guys can say what you want. But this is a man who got into a world he couldn't keep up in. The world of billionaires, and he lost out and he's out of the game.
Finally, we know they are shorting Ape to oblivion. 71,820,118 shares, which is a percentage change of 167%, bringing the short interest up to about 17%. Before we get into Ape's chart and when that happened, why that's happening, let's touch on the Orthex numbers for AMC. 28.93% short interest, utilization at 78%, and the cost to borrow average sitting at 339%, and the max at 360. So a big drop from that 1,000% that we saw. Ape sitting at 16.88% short interest, utilization higher than AMC's at 79%, and the cost of borrow being reported again right around that 8% level for Ape. Now we know we have the T+2 for short interest that gets reported to us 2 days later, so it was on this major dip to the major rip on Ape, and you can see that this was controlled. Shorts wanted to tank Ape all the way down to 67 cents, and they did just that. But did they cover on this way up? It's something that we won't know probably until tomorrow night. You guys let me know what you think about this in the comments down below. Why did they do this? Is the Ape conversion going to go through? And we do have some updates on the lawsuit as well in a second. AMC currently trading at $4.81, down 5% on the day, still flagging out but breaking to the downside, not looking too hot. Ultimately, we're seeing more sell volume than buy volume on AMC, so it's not looking the best. However, we did see that short interest has risen on AMC, as well as the short exempts stacking up, showing that market makers are pinning the price. Plus, AMC is still on the threshold securities list for 23 days straight, so the SEC is still not doing anything about this. I'm not going to hold it as the main catalyst, but it's definitely something to just keep watching until something does happen, especially seeing we got a 100% rip and we are still on the threshold securities list. So for all the people asking, was that a squeeze? No, absolutely not. Opportunistic petitioners must post a meaningful bond for a stay appeal. AMC basically urges, if you want to block us from raising capital, we calculate your bond as the damages you will cause us, $100 million a quarter. Now this is a very solid thing to see. Basically, AMC is saying, listen, we are burning cash. You know we are trying to raise capital. That's the point of this case. And if you want to throw a rock in that, this is going to cause damages, right? That's what it's going to count as. And we're going to charge you $100 million a quarter so that we don't burn money during this case. This was a boss move for AMC, and I like to see it. Also, AMC responds to Zern's letter. What defendants can say is that the sooner the company has clarity regarding its go-forward capital structure, the better it can act to protect best interests of all its stakeholders, especially its common stockholders. In other words, AMC again is reiterating that we need to raise cash for it to be in the best interest of shareholders. Thus, then we can protect shareholders. So when they delete the short thesis, they can protect our shares. Although it's very skeptical to trust Adam Aron because there have been ways around this and ways he could have just triggered the squeeze. Now on Wednesday, the Wall Street Bank reported that hedge fund clients of Goldman Sachs Group made their most significant increase in net purchases of Chinese stocks in 9 months on Tuesday. This surge was driven by the impact of recent government support policies in China. Now this goes back to that insane loop of institutions purchasing Chinese companies, pumping them up for liquidity, using Chinese bonds as collateral, the whole mix with phase 6. But do you think this has any correlation to AMC or GameStop? You guys let me know in the comments down below. Now before we get into GameStop SPY and some additional stuff, make sure to pop in the Discord, guys. You will not regret it. The link is right under the video. I'm in there on the daily, so if you want to talk with me on the daily, make sure to pop in the Discord. We all talk stocks in there all day long. Essentially, we are just there for making money. Most amazing people are in there, plus we have options trading alerts and more, so pop in the Discord. The link is right under the video and pinned in the top comments. Also guys, if you want up to 16 free stocks, each valued up to $2,000 per stock, use my link, download Moomoo, and make a deposit. It can literally be a penny. From there on out, the more you deposit, the more benefits you get, including a free Tesla or EXPE stock, as well as $50 sent to your account and 16 free stocks, each valued up to $2,000. Those links will be pinned in the top comments and linked under the description. Make sure to go do that. Let's get back to the video. GameStop currently trading at $22.84. There's no volume here. Honestly, the options chain is looking decent. GameStop is also flagging out as well as AMC. Both look pretty good, but assuming GameStop is going to follow AMC, you could see a sell-off in GameStop if the volume doesn't pick up and break out to the upside. Both of them flagged. AMC is breaking down. GameStop is still in its flag. So this is going to be interesting to pay attention to, as we don't know for sure if GameStop really got that pump like AMC got, like BBIG got, like APE got, like other plays got as well, including DWAC, and we could just go down the list. So GameStop could be sitting on a move, as well as PTON. So those stocks we are definitely watching. Oh boy, the SPY. What is the SPY doing? Exactly, almost like I said. I was saying watch 460 for the next level for the SPY. We gapped up to 459.51, and now we are scaling down, getting a little bit of a cool off. The SPY is in an insane bull rally right now, and what came out that's affecting the SPY? The Fed decision yesterday. Fed raises interest rates by 0.25 BPS. The rate hike was a unanimous decision. Fed will continue to assess additional information, and future decisions depend on upcoming economic data. Interest rates are now at their highest since 2001. This is the breakdown of what happened yesterday, how it's affecting the SPY, and where we are going from here. Plus, Powell has said that the staff are no longer forecasting a recession, which definitely pushed the market. And while the SPY was pumping, the US government has dropped campaign finance charges against Sam Bankman fraud. Well, you might ask, how did I not know about this? How did I not see about this? Why are they dropping charges on him? Well, while they were doing that, they decided to distract everybody by telling them that there were non-human biological pilots from crashed UFOs that they discovered. What do you guys think about this in the comments down below? This is my update for you guys for today. Hopefully you enjoyed watching the video or found value out of the video. Make sure to check my links, share the video, drop a comment down below. I love you all. Lottery Stocks out.